Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. So let's bring in our next guest. That's going to be Landon Swan. He's a co-founder at LikeFolio. Welcome back to the show, Landon.
Thank you. Good to be here.
All right. So we already hit on Tesla a little bit. Now we're talking GM. A lot of these OEMs in this space about to go on strike potentially. And I think you've seen the stock struggle due to that. Does your data support the stock moves at this point? Because it seemed like, over the last couple of years, we've seen continued demand in this space. But now, you've got a strike looming.
Yeah, I tell you what, the data, generally speaking, looks good for this company in a traditional kind of automaker sense. When it comes to innovation and the future, a little bit more hazy. If you just kind of take a look at stack up the comparison of all the different automakers, it's pretty clear that obviously Tesla's the one that's getting the most attention, the most increase in attention across social media and the web. And Lucid's the next one to follow. And then you kind of got the traditional ones in the mix there. But overall, yeah, GM is looking like a very solid at traditional automaking and in that business. Again, they've got that strike looming, which you just talked about. But overall, they're not really impressing consumers. You can see here their website visits are down about 3% on a year-over-year basis. Compare that to some of their, traditional competitors. They're beating Ford. They're not as good as BMW. But then you've got the outliers, the true EV plays at the very top of that chart. That's what's getting people excited. Side note, you've got Rivian lagging behind quite a bit behind Lucid and Tesla. I think that's really the differentiator here. Are they going to move into the future with electric vehicles or not? Because they shocked by the power cord, another recall where the battery was a fire risk. I mean, these are serious recalls, and so they've discontinued that project. And I think that it's a bad failure as far as innovation and moving towards the future, because clearly you've got to have the EV as part of your play in the future to compete with some of these other companies. And so, they're not doing well there. But you look at their last earnings report, they're up 52%. The revenue is up significantly. Our mentions on social media show them at plus 12%, led by Chevy and Cadillac brands. So they're doing well again in the general, automaker world. I think if EVs never existed, if that wasn't a thing, if Elon Musk was never born and brought those to the level that they've been at, I think that you see GM doing much better. However, you see this, so you got the mentions chart here. That's the blue line. That's the 90-day moving average of people talking about GM products and their brands. It's on a nice, steady uptrend. You've got the stock chart that, as you can see, it's got, 5 times that it's hit around this level, this 33 level, $45 billion market cap. I think that the price history is kind of telling us that the market feels like $45 billion is about the least that this company can be worth. So we're there, right? We've got that support level there. But I think one of the big reasons is, in about 55 hours or something like that, we've got a very big deadline on a potential strike. I know the unions are, they've lowered their demands, but they're still pretty far away from what GM's willing to pay. So we're going to have to wait and see what happens there. That obviously, LikeFolio has no insight on. And we don't have expenses. We don't have strike data. We have, consumer demand and revenue data. So what we're seeing is that they're doing a good job, nice and steady. And I'd say at this level without the strike, it's a pretty good buy. But I wouldn't want to buy and hold this company for 5 years. I might buy and hold it for 6 months or 12 months if they can get out of this strike. I just don't see them successfully innovating on the future. They haven't shown that ability. They've done a good job making cars, but they're not making the future of cars right now.
Landon, I'm going to put out a scenario, and I want you to tell me where I'm dead wrong on this scenario. Tesla keeps squeezing their own margins to put pressure on other EV makers, and every time they do that, they put more pressure on GM and Ford and Stellantis to get to a profitable level in future EV sales. I think Elon Musk is using his advantage to squeeze them. In terms of the strike, yes, they dropped from 46% to the mid-30s, but there's another lingering problem out there, and that is one of the things they want, Landon, is to go back from the 401k to the regular pension program, which is what bankrupted GM in years past. They're not talking about that very much, but they want, at a time where GM and Ford can least afford to do this, the timing on this strike is going to be horrible for this company, and Elon Musk keeps pressing his advantage. They're getting painted right into a corner, Landon.
Yeah, I agree, and I think that's why their stock's at the level that it's at. Is this going to be you've got buy the rumor, sell the news, and I think the opposite can happen on the downside. Could this be a situation where a strike happens and the stock gets relief? I mean, it's kind of a contrarian play, but it's on the forefront of everyone's mind so much that it could be baked in to a point. But I agree. I think long term, it's not painting a picture of a great long-term company. So again, assuming the strike is resolved, or assuming the disagreement on employment gets resolved somewhat, I think it's a decent buy at 33. I think there's much better places to put your money. But if forced to, I wouldn't be mad at buying at 33, but I wouldn't be holding for more than maybe 6 months, maybe a year. I just don't see a clear, bright future to exponential success for this company. They seem like they're just plugging along and doing an okay job. But like you said, they've got a lot of potential problems on the horizon. And, you've got one of the most successful people of all time pressing you and squeezing you into a corner, like you said. That's not a great spot to be in.
Yeah, Landon, and that one chart that you had with the mentions that are far above where the stock price is, that seems to be trending okay, as you mentioned. Now, when you guys collect that data, and you mentioned it's people talking about their products, does any of that data get in there where everybody's, tweeting about a potential, strike? This could cause some problems not only for GM, but for some of their suppliers. It could hurt as far as consumer spending tactics go. Does any of that data get in to some of the data that you guys have out of LikeFolio, or is it all strictly what the consumer is looking at?
No, it's all consumer. So we actually categorize social media mentions into either investor chatter or consumer chatter. So when it comes to things like CEO moves or strikes, or whether the stock's going to go up or down, that's all investor chatter. We put that in a separate bucket so it doesn't get filtered in. What we're looking at on that chart is people saying, I like this car, I'm buying that one, I test drove it, my brother got that one, whatever it is. People talking about the specific cars themselves. And you can see, that's it's a steady uptrend. It's not impressive. It's not like a founder's deck hockey stick kind of move. It's just, it's an impressive, nice little uptrend, and it doesn't match the stock price movement as of late, right? This is, the stock is basically going sideways, and it's at support levels. A lot of that has to do with exactly what Kevin said. The future is very cloudy and uncertain for this company, and so again, I think if you take away the strike, if the EVs didn't exist, GM would be much more valuable than they are right now. But this is the real world, and they've got to deal with these real world problems, and investors are just a little bit iffy on the future of GM.
And Tom, there is some good news. Their margins on the cars and trucks they're selling right now are really good and solid and healthy.
They haven't had to cut prices because demand.
They haven't come down since the pandemic, right. And they're starting to get more cars. Yeah. So there is some good news, but it's everything on the horizon that threatens this company.
Yeah, and let alone the consumer. That's going to be, I think, the key if they can hold up spending as the jobs data is still pretty solid. People are having jobs. All right, great stuff as always, Landon. Appreciate it.
All right, thank you.
All right, that's Landon Swan, co-founder at LikeFolio, breaking down the data for us on GM. Kevin, valuations.